Good day everyone, this is Patrick from EasyFX Code Trading System, and it is Sunday the 1st of December 2019, and it is the weekly analysis for spot gold and dollar yen for the first week of December. And after a light trading week with US holidays on Thursday and a half day on Friday, most of the pairs have been ranging, and spot gold has managed to recover late on Friday night, and it managed to find support still from the support zone and retested the weekly pivot. That's where the intermediate resistance is as well, and we can also probably shift this trend line to find this swing low now, and this is going to be the new support trend line in the interim, and it's also cutting across the support zone at 1450, 1453, right up to the weekly pivot at 1465. We'll see what the new weekly pivot will be from next week. This bounce late on Friday night was just that there were no further news on the US-China trade deal, and yes, without any positive news, and it has been weakening as President Trump has also signed a bill to support the Hong Kong protesters and supporters. So this has turned the mood a bit sour in the markets. If we take a look at the 4-hour time frame, right, it's managed to recover very late on Friday night. We shall see whether it's able to continue further up to retest the next resistance zone where the 200 period EMA is, along with the previous swing low here as well. That's going to be the next key resistance zone. Support zone has held over the last few weeks. It's down to the 62 fib retracement level. And on the back on the daily time frame, let's also take a look at the weekly time frame, and it's almost looks like a double bottom support and possible spinning top. So it's still uncertainty in the markets, as the first week of December will bring a few economic news with ISM manufacturing PMIs on Monday and non-manufacturing PMIs on Wednesday, which is the services PMI, followed by the key one on Friday, which is the US non-farm payroll. So that will impact both spot gold and dollar yen, both inversely correlated, and we'll see whether it's able to continue up higher to retest the resistance zone, or whether it's going to drop further down to the lower half of this descending wedge. Right, the 50% fib retracement level is just at 1469. So this will be the key intermediate range along with the 62 pip retracement level at 1448, 1449 area. Right, but yeah, meanwhile it has been consolidating for a while already, and for last week it's been a rather narrow range of only 150 pips. All right, let's take a look at the dollar yen. As an inverse pattern, the dollar yen has been moving up in a ascending wedge formation, and after a strong push up into to retest and break higher above the recent swing high, above the weekly R2, it has stalled over the last couple of days and did hit a high of 109.67, but it has stalled right at this swing high. We can turn this around so that you see what the extension level is going to be. So there could be some retracement before it can continue to push up higher towards the weekly R3 around the 109.80 to 85 level. But we'll see what the new pivot levels will be for next week. It could be slightly higher as well. So, but it's still trying to reach the 110 significant psychological level here. It's trying to creep up there. So we take a look at the 4 time frame. It was climbing up throughout the week, but then did stall over on the Friday. Let's take a look at the weekly time frame as well. Overall, it was a bullish close for the week and just blocked at the 200 EMA, right at the previous swing high at the 109.50 area. So for this coming week, there could be just a slight pullback, and it could, as I mentioned, it could attempt to try to push up higher. But it's also exposed to and dependent on the US economic news with the 2 ISM PMIs and of course the payroll report on Friday. Alright, do check out my other videos as well and have a good trading week. Cheers.